Welcome to Life Planning 101, brought to you by Smart Money Group and Kennedy Financial Services in Eastland, Texas. Tune in every week as we share important information to help you and your family live life on purpose. Insurance, investments, legacy and tax planning, and much more. All covered now on Life Planning 101.
Hello everybody, this is Sam Barker here with Aaron Kennedy on the Black and White Market Minute on Life Planning 101. Well, Aaron, what's going on in the markets today?
Nothing but good things, and it seems that I've been saying that for a long time. Another positive week. It just keeps trucking north, and it almost feels crazy at this point. You know, we had a pretty rough time up until the beginning of April, but since that low point, the NASDAQ's up over 40%. S&P's almost up 35. We've recovered. We've come out of that low point, and the market's behaving amazingly. And, even if we don't just use the market as a gauge, the economy looks like it's getting very strong. We have a little bit of weak points here and there. There was some stuff on employment. Summer months, employment was pretty weak. I think we were only creating about 30,000 jobs a month, but that's pretty normal. Summer months are usually weak. So if we look at it from a whole, investment in the U.S. is going gangbusters. We just lowered interest rates. Production is looking pretty good in our country. GDP has just been revised up. It's hard to look at things and say everything's horrible. Now, everything you read, it's horrible. I was reading another article this morning about why we're in a bubble and all the bad things that are showing up, and cracks are everywhere. But I look at it and it's like, golly, how much of this is a narrative that we want to see? One of the big bright spots is, hey, you can see how well our economy's doing by how many people are visiting Vegas. And Vegas, people are not showing up in Vegas right now. Well, yeah, it's 130 degrees. Nobody shows up in Vegas during the summer. And there's this stuff that if you look at it in isolation, it looks horrible. Look how many people are defaulting on their student loans. Okay, but didn't we just go through something that said, hey, you have to pay your student loans? So there hasn't been a change. We're just requiring you to pay back what you owe now, and it looks bad. Now, not everything's rosy. What's the company Tricolor? They just went bankrupt, and that is a subprime auto loaner. So that part wasn't looking good, but, I'm torn right now. We are very, very expensive in the market. We are looking, if you just look at it from multiples of the market, how much we're paying, we are historically in a bubble right now. But historically, we've never been in this point. I look at companies right now. Was it NVIDIA just invested in Intel? The U.S. government just invested in Intel. U.S. government just invested in rare earths. ASML just bought an AI company. I saw a chart on how much money Microsoft is investing on a year-to-year basis. Companies are piling money into investments. So if we have this much flow of money, maybe we are growing, and a lot of this stuff is justified. As an investor, I'm incredibly excited right now. What Trump is signing the uranium enrichment deal right now. If we go back as far as humankind has been here, the growth of our civilization has always been by our ability to generate power. If you think about caves and sitting around a fire versus, where we are today. A new energy source or bringing on new energy is just going to help propel us forward. Cheaper energy, more abundant. You look at what we're doing, we need a tremendous amount of energy to run all these data centers for AI and just the way we live our life, charge our electric vehicles. We're doing it, and this is all happening right now in 2025. So maybe we're growing.
Maybe we can grow into kind of what everybody expects. So what I was thinking whenever you were talking is you were talking about all the investment going on, and it made me think of the way that the world used to work is you put up all the money and you build the factory, and it's not until the factory's complete and the employees are hired on that the factory starts producing.
Yes.
So it still feels like we're building out the factory, the infrastructure, the power capabilities on this AI wave before the true production really starts.
Yes.
And what does that look like? I mean, if one person can do the job of two, I mean, what does that look like? Margin expansions, lower expenses for every dollar of revenue. Some companies are going to blossom into, I mean, if you look at, so I'm thinking about Facebook right now and their ability to scale with the internet. They were founded in 2004, 2005, and then by 2013 or 2012, they IPO'd. I mean, think about how fast that scale was, and it wasn't
Yes.
that he didn't even have to build any factory. It was
Is it code?
yeah,
People.
and now now the computers are coding themselves, or at least we're on the path to that. So it's kind of the scalability of the next 10 years is going to be mind-boggling.
Yes, it is. Productivity. Yeah, I mean, you just said it. Productivity is such a huge part of economic output. What if that doubles by this time next year? If productivity is doubled, you don't need a lot more inputs to keep pushing us forward. So, it's a very, we can say, challenging time and be very positive about it. Very, very positive. Yes, we are expensive, and there's a lot of companies out there that are pushing that narrative of how expensive things are, but there's plenty of the market that is undervalued. What if we just played catch up? What if Palantir the price didn't change over the next 2 years? That'd bring your average return down to about 70% a year.
Yeah. Well, and I was thinking, if we look, you hear a lot, this feels like the late 90s, this feels like that old AI or the old technology bubble. And I started looking at some of the differences between then and now, and I'm sure you're familiar with all of this. And we've talked about it before, but it's still pretty revealing about, how crazy that time really was as opposed to this time. You literally had pre-revenue companies. It's just an idea going public and garnering a ton of money before they've earned a drop of revenue because they had .com at the end of their name.
Yes. That is drastically different than what's going on today. It was just a pure money suck back then, and now we got companies earning an unfathomable amount of cash, and those are the ones driving it. So, big difference.
Yeah. And those companies, the most profitable cash flow heavy companies are the ones that are what everybody's concerned of being so concentrated. So if you look at concentration in the 2000s, that was a big concern. Concentration is a concern for many investors today. But those companies that are so concentrated in the indexes, they're generating so much cash, they're generating so much earnings, their investment, as you referred to earlier, it's just going through the roof. And a lot of them are being invested in themselves by the rest of the market.
Yes.
Such as NVIDIA. I mean, everybody's trying to get NVIDIA chips right now, and that's where that's coming from.
Right. And, one thing that I struggle with thinking about is these companies, they're not a one-stop shop. You look at Google. Is that a search engine? That's a very, very small part of their business. You know, they owned the driverless cars.
Waymo. Is it Waymo?
Yes, I mean they are so much more than what's on the exterior. So I think if we ever got to a point where the government did break them up, you know, the market the market cap would look way different if we were looking at the S&P 500.
Yeah.
But they are so big and so diverse that it looks weird.
Well, it's like Berkshire Hathaway. You know, used to the S&P 500, if you broke up Berkshire Hathaway's separate businesses instead of just one pretty much holding company, I mean, the diversification of the index it's there.
Yeah, that's exactly right. That's a great example. That was one of jump off topic. Thanks a lot. But you know, once we go into that convention center and you see all the companies that's in Berkshire, it's mind-boggling.
Yeah, you can look at a private jet that's taking rich people all over the country while buying new boots and eating ice cream all at the same time from the vendors of the. You know, it's just wonderful.
Yes, things are much different than they appear, and that's a lot of these companies, Amazon, Google, Microsoft, even. You know, these companies are very broad in what they do, and it is not just one business segment that you're actually investing in. But that's beside the point. We are still concentrated, and there is very few companies at the very, very top, and they're almost all expensive. That's big picture. Now, the hope and the dream is the rest of the market catch up, and if we start seeing AI actually do what it's supposed to, and we see those productivity gains, everybody's going to catch up. The market is extremely cheap if these productivity gains actually show up. So who's to say? Who's to say if this time is different? Who's to say if the market is actually expensive? You know, it's challenging.
Yeah. Well, and I just kind of. We were talking about how do you look at today's investment arena, and I started thinking about the 1950s and 60s, and so I went and did a little bit of reading, and they thought in the 50s and 60s, after the end of World War II, that a bubble was developing, and they thought that for a few years in the 50s, and then the broad market as a whole, it was one of the most prosperous eras in American history between World War II and the 70s, and so. I think it's just an opportunity to, and we have the recency bias. So if you look at where we're at in the world today in relation to a longer term horizon, I mean, the world's going to end up in a better place in the next year, 5 years, 10 years.
Yeah, I 100% believe that. And that's one thing, regardless of where we are today in the market, I think everybody needs to keep that in the back of their mind and just realize that, hey, if the market goes down, oh, thank goodness, I got a second chance at this. You know, because the market going down is not a bad thing. Historically, it's always been a good thing because you got a second chance of investing in great companies at a better price. And if you can keep that mindset, you're going to be very, very successful investing.
Yeah.
So,
spend a little less, invest a little more today in a down market, and then be able to spend a lot more down the road when needed.
Yes. You know, back to bubble today or whatever, you know, we just lowered interest rates. And I don't think there's ever been a time historically that the market was not up 12 months after the initial interest rate drop. So I think we can still keep running for a little bit. And a couple of other things, you know, investor confidence and consumer confidence is horrible. We're at lows and usually don't drop from there. If it's as bad as it gets, you don't go lower.
Yeah, if everyone's skeptical, they've already made their moves.
That's a fantastic time to be investing. And then if we look out in the private worlds, I'm talking private equity, venture capital. First quarter of this year, they raised 35% less than the year prior. And these types of firms have been struggling raising money since about 2021. So again, how are you in a bubble if nobody's participating? So who knows? I don't think we're quite there yet. Things are not rosy enough. I guess I'll go next time I get my hair cut. If someone's telling me how I should invest my money, then I'll start to realize how big of a bubble we're in. But right now, it's not happening.
Yeah. Let me know how your next hair appointment goes.
Yes, will do.
All right. Well, and I just wanted to, I looked at a chart earlier today. Well, a couple things. Henry actually reiterated kind of what you told me. He was the first one that mentioned it to me. He said, we're at all-time highs and they're cutting interest rates. Never has it been in those two specific scenarios where the market wasn't higher 12 months later. It's not ever, as far as we can tell, ever happened where the market was not higher. So there's a little bit of optimism. And then I was looking at some longer term. I say longer term. Back to 2000, I wanted to see what the markets had done the last time, the bubble speculation was going on, and whenever it turned out to be true on the .com bubble. And if you'd invested 10 grand right at what was the peak at the time, then not a lot of people were aware of it, you'd have $75,000 today. So 10 grand multiplied by 7.5 is where you'd sit today. So the world's going to be in a better place in the future.
Yeah, even if it's the absolute worst time.
Even if it's the absolute worst time. All right. Does that get us taken care of today?
I think it does. Everybody, we got plenty of stuff to worry about in this world. The market shouldn't be one of them. Future is going to be great regardless of what happens tomorrow. 5 years from now, this is going to be a blip on the calendar. So keep your heads up, love your families, and everybody have a great weekend.
That'll be another episode of the Black and White Market Minute on Life Planning 101.
Thank you for joining us for Life Planning 101, brought to you by Smart Money Group and Kennedy Financial Services. If you have questions, you can email them to lifeplanning@kennedy-financial.com. Be sure to tune in next week for more Life Planning 101. The opinions expressed herein are those of the firm and are subject to change without notice. The opinions referenced are as of the date of publication and are subject to change due to changes in the market or economic conditions and may not necessarily come to pass. Any opinions, projections, or forward-looking statements expressed herein are solely those of the author, may differ from the views or opinions expressed by other areas of the firm, and are only for general informational purposes as of the date indicated. Securities offered through Calton & Associates Incorporated, a registered investment advisor, member FINRA SIPC. Investment advisory services offered through Smart Money Group LLC. Kennedy Financial Services and Smart Money Group LLC are separate entities and are not owned or controlled by Calton & Associates Incorporated.